Dollar going down, emerging markets going up. That's a play that you can run for a while if that's the trend. Do you remember, Mike, back over here when the dollar was near the trying to break 100 the first time, and we're like, hey, I was making the case that if we did actually break below there, that would be like the bull, one of the bull flags or bull signs for Bitcoin
For
to
Bitcoin,
hit
right?
all-time highs.
Mhm.
Then we got this bounce up, but the idea that we reversed it and now we're back down here is another feather in the cap of, hey, maybe we
Could
are
be
going to hit this
bullish for
point.
crypto for sure. Yeah.
That's right.
I think that was about the time in which you had an estimation that the dollar would rally to about 108 to 110, and you ended up being right about that one.
That's right. Yeah. That's yeah. Okay. So we'll leave that before we actually move to some of the smaller news items. I think we should go ahead and thank our sponsor, TradersPost. Let's take a moment for that.
This video is brought to you in part by TradersPost. Tired of manually juggling your trades and worrying about code just to connect to your broker? TradersPost turns trade automation into a no-code breeze. Whether your signals come from TradingView, TrendSpider, or your own custom app, your strategy can run seamlessly across more than a dozen supported brokers and crypto exchanges like Tradeovate, TradeStation, and Coinbase. And when you're ready to scale up, TradersPost will be right there with you. Run multiple strategies, connect your prop firm accounts, or even share trade signals to thousands of your community members. TradersPost grows with you. Head to TradersPost.io to start your free trial and see how much easier trading can be when it's automated. That's TradersPost.io. Trade smarter, automate your edge.
So just to piggyback on that, I just want to make sure it's clear for everybody when you're watching. When you're looking at macro level news and events and reports, the way that we're talking about, you want to keep in mind that this can absolutely be used to back your trading, your discretionary trading and your automated trading. Um, as soon as you start understanding stuff like, hey, the credits, the spread between the 3 month and the 6 month yield can actually be a trend signal for your indicators. You start thinking of the world and the macro world as one of those underlying layers underneath your strategies. I don't know, Mike, if you've seen this inside of your career, but the idea of being able to switch from bullish to bearish, not just based on price action, but anticipated based on some of these macro levels, like the movement of the dollar, the movement of gold, correlation between different assets, can really be an edge to get you in the right direction earlier than you might otherwise.
For sure. I do keep track of correlations between assets. The global macro signals are harder to glean because a lot of those are lagging indicators. So price usually ends up taking precedence in at least my approach to markets. I want to see where markets are, where the sentiment shows up, particularly around volatility, speed of movement, and whether or not price is following a predictable linear regression trend, right? Linear regression is definitely something I use quite a bit, but the correlation between assets are an important one as well. The what often happens is price sends the signal first, and then the economic indicators confirm that price action was warranted.
That's true, but also something that happens is that if you're trading options, well, then when you're taking a look at the economic indicators that are coming out now, even though they're lagging, that's not generally necessarily priced into the option space. And so you can actually trade the volatility or use that as a signal if you're trading if your trade is longer term. Like you can still trade shorter term options, but expirations further out. And so you get this effect where a GDP report today might have more effect on where the options chain is saying that a recession is going to happen in a year and trade that now.